Hey, welcome back to Everything Money. We're glad you joined us again. As always, we're talking stocks, businesses, investing, and today we're looking at these chips. Paul, the chip shortage is a real thing. It's happening all over. It's not just affecting cars. Some car companies are shutting down. Yep. Mo cannot buy a Tesla no matter how much you throw money at Tesla. It simply can't deliver a car. And the two chip companies that we love talking about, Paul, you are a huge fan of Intel, and we did an Intel video a few weeks ago, maybe a month ago. We did not bring up AMD. We'd mentioned some other companies, and so we'd like to do a head-to-head comparison of Intel versus AMD to see where both companies are heading in the future and how they look. If you were looking to invest in one of these, which one would you choose?
You said I'm a big fan of Intel. I'm a big fan of both Intel and AMD as companies.
Go on.
As their stock, I'm a big fan of Intel.
Oh, I see.
They both make great chips.
Mm-hmm.
Right? Both make great chips. The differentiator is I look at the stock and the business as separate things, and they are separate things.
This is very hard, Paul. Go on. I don't want to cut you off. Go ahead.
Well, no, go ahead.
I was just going to say, Mo and I talked about Tesla, and again, we still get the you guys don't get it. Tesla's gonna do this, and they're gonna do that, and they're gonna grow, and they're gonna do this, and I just literally think to myself, yeah, but you have to explain the stock price may not follow that,
and that's fine. I'm sure maybe they will do it, and if they do, then maybe we'll buy it.
Yep. That's right, Mo. If they do, then we'll buy. But so go ahead. What were you saying, Paul, about these two chip companies?
So I'm here to analyze them as a stock.
Yes.
As an example, let's go to an extreme. If I told you could buy Intel for $1, not per share, the whole company for $1, would you buy it today? Let's go look at their income statement. Last year, in the last 12 months, they've made $18.56 billion. If I told you could buy the entire company for $1 today, would you say yes? Of course you would.
Of course, yes.
If I told you could buy AMD, let's say AMD's chips are twice as good as Intel's. $100 trillion, would you buy AMD?
Of course not.
Of course not. That is my point. You say, Paul, it's an extreme. That's the point of investing. Somewhere in between, there's a good price for the companies and there's bad prices. There's a point where it goes, this isn't worth it. That's the whole goal of investing, where the perception and the reality mix together, okay? So for Intel, I'm looking at the company, I look at the 8 pillars. It just happens to be one of our 8 pillar stocks. Their 5-year PE is 12.3. Their return on invested capital, 11.5. Revenue growth, they have $16 billion in more revenue growth. Net income, $5.8 billion more. They're buying back shares. Their debt levels are very reasonable. They can pay off all their long-term debt with 3 years of their average free cash flow. Cash flow growth and price to free cash flow.
These are the 8 pillars we look at as an initial screener to say, are we interested in this company? We then do our due diligence on this company and see if we want to buy this. So 8 pillars doesn't mean it's an auto buy, but it's definitely sexy under our eyes.
And I will say our new 8 pillars, I think are better about saying, hey, should I buy this company or not? Because we made some really great changes to the 8 pillars that make it a lot better to look at. Now, I'm not saying to put all your money in this thing. Even for me, I'm a diversified guy. I want to have 30 companies similar to this that I like because I'm going to be wrong. There will be times that I'm wrong. Intel is losing market share to AMD at some point, right? It has been, but guess what? In 2005, when I was a wee lad just out of college, I was hearing the same story. AMD's taking market share from Intel. That was 15, 16 years ago. Intel has not died yet, okay? Let's look at AMD. AMD, look at this revenue growth for AMD. Look at this revenue growth. 4.8 to 13.3. This is massive revenue growth, right? Okay, let's go to the 8 pillars.
A different story.
Yeah, the PE is huge. Why? Because they haven't made a lot of money. They don't get a high return on invested capital. They don't make a lot of money. Their revenue growth is good. Their income growth is good. They've diluted their investors. They've increased the number of shares they have by 50%. Jeez. This alone, guys, hurts you a ton. A company can double, triple, quadruple its revenue and profit, but if they do the same with their shares outstanding, you got zero benefit. This is the silent killer. Nobody ever looks at this. It is one of the most important things to look at in a company. They have very little debt, better than Intel actually. Cash flow growth, and look at their price to free cash flow. We want it to be under 20. It's at 383. Does that mean it's not a good buy? No. Is this alone to say, look at Carnival Cruise Line. I'm buying Carnival Cruise Line. It has all 8 X's, I believe.
Yeah.
Maybe one check. That's it. I'm looking at saying, guys, at some point you have to be aware that you're buying $1 of profit. Now, is AMD's growth future better than Intel's? I would assume so. They're a smaller company. They're taking away market share from Intel. It'll be harder for Intel to control that. Intel's so big, they dominate the market. Their growth potential isn't huge. But guys, you cannot overpay for growth. Price is what you pay, value is what you get. Okay? You have to remember that. If all you care about is growth right here, their revenue growth, this is all you care about relative to Intel, $109. Why not $209? Why not $130? Why not $290? You might sit there and say to me, oh, Paul, $290 is ridiculous. I guarantee the stock hit $290 tomorrow. Everybody was saying $290 is not ridiculous anymore. Just like Tesla. When Tesla was at $70, I said that was ridiculous. Paul, it's not ridiculous. $700 is ridiculous. It's at $700 now. Those same Tesla fanboys don't say that it's ridiculous anymore. They're not selling it. They still love it and say it's going to $6,000 a share. Right?
Yeah.
So my entire premise behind AMD versus Intel is AMD is a great company in terms of making a great chip. I have computers with AMD chips in them. I do not look at that and go, oh, gross. I bought a Tesla. I currently have on order a Tesla. I love the company, hate the stock. I like Intel. I like AMD, both. I like one stock more than the other, and that's Intel to me. It's way more, it's got lower multiples. I don't care if it never grows. I will still make a good return. We brought the example of our houses in Mexico. I have no idea what my houses in Mexico are worth, and I don't care. Why? Because we get 15 to 20% returns in cash on that property. If I own it for 60 years, if I own it for 30 years, I will make multiple times over my money on the investment. If the house is worth zero at the end, I still made a very high return on my investment. So why do I care? That's the way I view Intel. If Intel just keeps buying back its shares, strengthening its balance sheet and making distributions to its owners in the form of dividends, I don't care if the stock goes nowhere. It'll still make you above average return on investment. And that's what matters. With AMD, it's got to hit home run after home run after home run, stop issuing shares, stop doing a lot of things it's already doing to then be able to get you a good return on your money. And that's asking too much from a company.
If you're we're talking about value investing, long-term holding, but if you're interested in trading this at a quicker pace, you can join Mo in the BidNast Nation on everythingmoney.com and trade this. Mo, how are these two companies stacking up to each other?
So the thing that I like about Intel is right now, it's just been a dog stock for a very long time. It's on the bottom. It's just declining in price. But I like that gap that happened back there in May. So right now, we are starting to get that uptick in trend right now. So I would love to get this thing moving up, get into that sweet spot. And I do think that this gap is eventually going to fill. So this thing can get into the mid-60s again. Now let's look at AMD and make a comparison. And remember, this is from a charting perspective. This is in the short term. Nothing to do with value investing. Right now,
I assume you said sharding and not charting?
Sharding and charting.
Go ahead.
I like to read charts while I shard.
Sharding?
So right now, so we're near these highs right now, and this is going to take a lot of volume to get through there. You do have a downtrend going right now. So this, in my opinion, at this moment in time, I like Intel better from a long-term perspective. Now, the downside to liking Intel from a long-term perspective is, let's look at AMD's short-term chart first. They're on top of all four of their major moving averages. So it's easier for them to get up here. With Intel, they are below all of their major moving averages, INTC. There we go. So it's a little bit more challenging. They're going to need more volume to push them up. But over the long run, from the long-term perspective, which I prefer, I like Intel more than AMD.
Just like the long-term. Yeah, wow. Okay. I didn't know you were going to say that.
Yeah, I actually thought I was going to say AMD more.
Yeah, I was going to say, there just seems like there's more excitement about AMD than Intel. But
now, the problem is AMD is going for those all-time highs. All-time highs are tough. That's the thing. Now, if this market keeps going, AMD's tech is going to keep going with the market.
If you're interested in the numbers and the software behind Paul, you can have this software to analyze your portfolio, individual stocks. Frankly, I don't know how anyone is investing without looking at the numbers. You can go to everythingmoney.com or Patreon. We're on both, and you can sign up and get access to the software. Our software goes up every single month. Our Discord membership goes up every single month. And you can chat with people about these trades and get into this war that is the chip war, Paul. When we bring up these the comments below are frothy. People are very adamant and about these chip companies.
It's so funny how passionate people are about chips.
Oh my gosh, it's crazy. So
it's not something I ever thought about.
So Paul is using the stock analyzer tool. This is the final piece of the puzzle. If you like Intel, it's an 8-pillar stock. If it's in your wheelhouse, what should you be paying? How do we justify a price. You know, Mo, I see all the time. I watch some other videos of some YouTubers, and people they just seem to throw out random prices. Like I'm buying any Palantir, anything under 40, I'm buying. And I'm thinking to myself, why? Well, this is one way you can look at how you translate the future numbers into current stock price. Go ahead, Paul.
So guys, let's start with Intel. I'm making very conservative assumptions on Intel. Revenue growth. Guess what? I'm going to assume 0, 1, and 2% revenue growth. Buying shares back. 2%, 2.75, and 3.5. Now remember, my lows are actually even lower than what they've seen in the last 10 years. Profit margin, 21, 22, 23. Same with free cash flow. I decreased my PE to a maximum of 15. It's a big company. I can't expect a 20 PE for a very mature company. That's just not right. So I'm going to decrease. And remember, I'm a fan of Intel. I'm not just trying to hype my numbers up here by putting a PE like, who's that idiot running for California governor who puts a 70 PE on Tesla?
Yeah.
It's just stupid. It's like
Kelvin.
10 years from now, when they're a $3 trillion company, they're going to be selling for 70 times PE. That's a ridiculous statement. Mm-hmm. Returns, 15, 12 and a half, 10. I hit analyze. Guess what, guys? $77. It's at 54 right now. And what have we been saying? We've been saying sub 50 by Intel. We're buying Intel at sub 50. And it proves right here we like it. I have some shares in the low 40s. So I'm looking at this saying, okay, it's selling for probably what it's worth right now based on my conservative assumptions. Let's go to AMD. Let's look at AMD here, guys. Okay, look at these revenue growth numbers. I'm putting 10, 15, 20% revenue growth. Guys, 20% revenue growth for 7 years is a lot. Share change. Guys, look at these shares. They're issuing shares like crazy.
Yeah.
Going 963. Profit margin, 12, 14, 16. Same with free cash flow. I put a higher PE because I know all the AMD fanboys want a higher PE. I'm just doing this to show how insanely overpriced this company is. It's at 109 right now.
Your boy.
Even my best assumptions, it's got to fall 30%. On my best case assumptions, it's still got to fall 30%. Over 30%. I have it worth in the middle level, $31 a share. That's a 70% drop from today.
And
okay.
Again, folks, this is not what it's worth. You're saying this is what you want to pay to
get a 12.5% return on my money
over 7 years.
Yes,
that's
if
what
I want to
you
make 10% return on my money with the best assumptions, I still can only pay $72 a share. So guys, even paying $72 a share today, if my best assumptions work out, I'm overpaying by buying it for $109. If I want to pay $72 today. What would that make my return? On the best assumptions, right now, on the best case assumptions, to pay for the price today of 109, you basically can get 3.5% return on your money.
Not very
Guys,
good.
I just believe in not overpaying for growth. I think Intel, because it's boring and stagnant, people don't like it. That's why the price is lower. I'm buying it.
Very nice, Paul. That is our take. Intel versus AMD. Join everythingmoney.com or Patreon. Get the software, and you will love it. Thanks for watching. Fondle that thumbs up on the way out. And, I love you. I love you, those patrons. See you guys. Appreciate it.